Welcome back to this live session, traders. Hope that you had an enjoyable day, and starting with another pretty busy trading day. And after previous daily move, looking at here another new trading day. So let's begin on Tuesday, second day of the trading week. All right, so some news that has come out. You can see some significant news, and let's look at quickly what's happening. The market is pretty volatile, isn't it? Gold is strongly bullish. And I would like to see that, first of all, the fundamental perspective here on gold to be bullish. Let's look at here what it said. Okay, looking at the Fed will be forced into deep rate cut in 2026, boosting gold and breaking the dollar. Okay, sentiment is, we can see that there is a bullish sentiment on gold, while the dollar might break the support. Okay, so that in keeping in mind, okay, that's only the Fed. Where are you proposing I buy gold from? Okay, welcome. So first of all, I would like to know that you guys can hear me and see me properly. Stream is well. Let's begin our trading setup for today. The market in a key level. So the first step here, if you look at the 4-hour price section, okay, this is the 4-hour time frame, and in that 4-hour time frame there is a key level. Okay, key level means that this is the current session's low. The market on gold is significantly bullish, and you can see that it maintained a bullish market structure here. All right, so with that bullish market structure, there is a possibility for further upside here, and there was a red candle. Audio is good. Thank you very much for confirming. Hello, happy new year to you, wishing you a profitable year of trading ahead. Thank you, and reflected back to you. Okay, this is very important, guys. This is very important. It's reflected back to you. Anything you'll say and do will be reflected back to you. This is how the universe works. So make sure that always keep that in mind. And that being said, it's the way everything works. So, you know, always wish for others what you want to wish yourself. That's how you can reflect it back to you. All right. So did you like this stream? Let me see. Like is still very less. Probably we haven't started the trade setup yet, that's why. Okay, did you smash the like button yet? Okay, I see it's going back to the upside. Thanks for that. Now let's look at here on gold. I'm looking at an entry opportunity here in this market. Thank you. Awesome. So here is the support level. All right, let's look at that support. All right, so 4-hour time frame, we can see there is a support here that has a bounce in that area, and the current session's low at 4448. The previous session's low is at 442. So looking at this market to give us a proper entry opportunity here. Okay, so now the current session's low is here. Looking at the intraday time frame, so if you look at here, this is the current session's low, breaking below here at 4448, or even from that level we can expect an upside. There is a breakup structure that you can see. This is here the change of character, change of trend, on the lower time frame, which eventually, if you look at the engine, that we can see the key level to look for. So this engine will give you what level to look for. The current level as per the trade entry engine that we can see to look at this level at 4448.75. all right, so this is the key level to look for. Now how you will be looking at the key level, this is automatically drawn by the engine. So if you haven't got access to that, you can get access to that. That's helpful. So this is the current session's low. If you look at the 4 hour, and we can see that from this support level. Okay, so if you look at from this support level, bounced back to the upside here, and from the 15 minutes that you can see the market made its move back to the upside. From the 5 minutes here is the support level. So the current session's low is here, the same key level that you see on the 1 minute chart. And okay, so come on. The market has initial bounce of this key level that you can see from that zone. Okay, so already had a bounce. We might see that the market coming back to that key level again, or not coming to that key level again, could eventually reverse back to the upside here in that market. All right, so now looking at in that zone here, looking for an entry opportunity. This is a narrow doji here. And that narrow doji is important to look at. All right, so here is the lower time frame price action. The bias here is still bullish, so we are looking at buy entry, right? And 1 hour price action has, this is the candle close here on the 4 hour, and we can see from the candle close the market has got the rejection back to the upside. Couple of key levels that the market is showing up. Will not be considering the resistance line here. We will be considering only the support level, because it's a bullish market structure at the moment. So this is 1 minute change of character here. Okay, we can see that there is a change of character in that area, right? Looking at, this is the trend line, right? You can see that trend line, and there is a change of character. So this is entry start here for the bullish. Okay, so bullish move start from here, and the market structure is showing that there is a possibility for further move back to the upside here in this market. The 15 minutes closed, right? And that's also showing that potential upside here. Couple of key levels that you can see. Okay, so here the market trend changes again. Now bigger trend on the daily is bullish. If you look at the daily market, it's a highly bull market. The market is above 10 exponential moving average on the daily. From the 4 hour that you can see, also the market after this candle close has shown an upside bias here. Looking at in that level for an entry. Ready for an entry? I would like to see how many members ready for an entry. You must use a position size calculator. If you don't know, If you don't have one, you can download it from your student dashboard. Welcome. So here we will be looking at an entry. Okay, look at this is a key level. We will be looking at entry in that area here. So there is a breakup structure that you can see with this order block. This is an order block here. Okay, now with this order block, there's a break, change of trend, the market maintain now an uptrending structure here, and this is now a newly developed uptrending market structure. All right, so why it is so important now, this trend? There are a couple of things that we can look at. Is the major trend. So you would like to see the breakup structure here in that market. Simple, guys. There is nothing complicated. Okay, the only thing that we need is a directional bias stronger and then confirmation of price action. Hi coach, welcome. I entered a trade at 4448 about 15 minutes ago. Okay, so you entered the bullish trade that you want to say. Awesome. It's showing a very stronger bullish confluence here at the moment. The market may eventually reverse back here to the upside, to this key level. Okay, from the order block, the market has made its move back to the upside here in that area, so which is maintaining this uptrending market structure. And it's maintaining the uptrend, and with this uptrend here, breakup structure will not be taking this key level here. So this is basically here, okay, for this level. Will not be considering that key level because it's in an uptrend. We will be considering this key level here. All right, so this is an auto drawn by the engine, the trade entry engine, which is currently showing this is an order block. Now breaking below from this structure is where you want to enter the trade here. Some of the levels that we are looking at. Sir, where are you looking gold ahead today? Bearish or bullish? What about volume? Okay. Gold is bullish. There's no question about it. And the volume is now it's coming up, right? Because we are progressing towards the NY session. There is significant volume in gold market now. Okay, so fundamental, looking at fundamental, there is a high probability of rate cut. So looking at, okay, the Fed will be forced into deep rate cuts in 2026, boosting gold and breaking the dollar. All right, so that means in 2026 there is a higher chance for gold to be bullish, and the next Fed chair will grapple. What does that mean? I really don't know. With a deteriorating US job market and slower economic growth. US job growth is modest and momentum is weak. Okay. Slowing growth, okay. Okay, so this is a big story. We don't have to read that much. We can read later. There is some important information, but at the moment, the key points here is that there is a higher chance for rate cut, and that will bring gold further to the upside. And from the technical, we can see that, right? We can see that from the technical perspective, that gold is going to be significantly bullish. All right, you're on point. Okay, now for us to enter a trade, we want to see the breakout structure coming down here for another potential retest. This is a bullish impulse from this level here that you can see on gold. Thanks a lot. Thank you. Yes, a buy trade at 4448. Very fortunate to have entered at the point when it broke the structure. Okay, we might be able to find an entry in that area. What I'm looking at here for deeper pullback, a breakout structure on the lower time. This is the 1 minute price action. You want to see, because this market already had, this is an ordered block, 1, 2, 3, 4 flight back to the upside, looking at this one to potentially reverse back again to the support level. So this breakdown that you can see is important to look at where it is coming, because it's a long-term bull market. So breaking down here can give us a potential buying opportunity here in this market. And this is what I'm looking at, this price action, to give us an entry opportunity from this key level of support. By the way, guys, if you're enjoying the live session, make sure you like this stream. Did you like? Smash it. And also, don't forget to subscribe to the channel if you haven't done yet. We see some change here in that area. Okay. in that zone here, and that level is what you want to see the market to potentially come back below here. And looking at the 15 minutes again, this is the intraday support. The bias here back to the upside. Okay, this is a bullish zone. We can see there is a buying pressure here, that the market has created a stronger bullish confluence. Looking at possible further pullback. Where are you based? I'm based in Australia. Where are you based? You can share your experience, where you are, how long you are trading. Share some of the experience that you have. It's gonna be helpful for everyone. Are you new or having some experience as a trader? Okay, looking at here in that area, expecting the market to eventually come down for a pullback. Before we look at that entry, awesome in Victoria. I've been on gold about prior was about 3 years on crypto. Good to hear that. Yeah, you know that trading is the one that most trader play short term. Okay, you need to look for the long term. You need to look for the bigger picture. That's where you started to see everything, right? Looking at bigger picture is the key. When you look at the bigger picture, you started to see how the smaller picture shift. So what is bigger picture? I'm from UK only, about 8 months of experience and trading mostly gold. Why? This is why I follow you. Welcome. Very good to see that all of you dedicated trader, which is needed, right? Yeah. So becoming good at trading at specific time frames, specific strategy is the best way to trade. Like if you look at this the market that we are trading now, look at the big list of currency pairs that you can trade, all of them. And when I started, I used to trade everything, right? And I started swing trading, and I used to look at every instrument. I think there is no instrument less that I haven't traded. Dollar Mexican, CAD CHF, Aussie Yen, USD Thai Baht, AUD USD, USD CHF, okay, everything, NZD CAD, NZD CHF, AUD CAD, USD ZAR used to trade a lot, swing trade, USD CNHS, Euro CAD, okay, everything, dollar yen. So you can trade everything. The only difference is that I realized that, okay, I can trade all of them. if you look at the 5 minutes candlestick pattern, right? Let's say you are looking at the 1 minute. Let me put side by side, and you're gonna see a very interesting fact here. Two charts, right? So I got gold 1 minute. Guys, this will open your eyes. You'll understand that what you're talking about. And looking at Euro GBP, oh, come on, this is gold, and then looking at Euro GBP, okay, on probably USD Euro CAD. I'm looking at the 4 hour. So if you look at these two charts side by side, this is Euro CAD on the 4 hour time frame. And if you look at the 1 minute chart on gold, what do you see? There isn't much difference, isn't it? There is one difference, is that Euro CAD is on the 4 hour is less trending, it's a mostly sideways choppy, than gold on 1 minute. So if you look at gold on 1 minute, this is a massive trend, and then again massive trend, and you can see some of the move are massive. From here, big move up, and then deeper pullback. And so basically what it means is that the candlestick pattern at different time frame, they look same. So what does that mean to you? Let's understand. That means if a strategy works on 4 hour, it will also work on 1 minute. They look same. They obey the same moving average. They follow the same pattern. They follow the same head and shoulder. They follow the same double bottom, double top. Therefore, if you learn one strategy to trade on 1 minute to anything, okay, either it's gold, BTC USD, Euro CAD, AUD USD, Euro USD, GBP USD, BTC USD, okay, you can trade anything, any time frame. Okay, you can go to even the stock market and trade on 4 hour, 1 hour. Same law is applied, same strategy is applied. It works in everything, in every time frame. So the only difference that you need to look at two time frame aligning together. Two things. One is the align yourself for the trend on the higher time frame, and also trend on the lower time frame with entry. So if you are trading on 1 minute, never only trade on this one time frame. Okay, do not open any trade based on the 1 minute confirmation. Look at the higher time frame to see the direction overall in the market. Secondly, if you are trading on the lower time frame, find the best session to trade. So what do I mean by best session? So if I give you the best session, what it looks like, let's look at our trade that we have opened earlier that I have sent out. So this is the trade that was sent in the premium group earlier in London session, right? Okay, we have secured the trade straight after opening within short period of within 5 to 10 minutes. Now this is a strategy that it took me to master years of time to understand actually how the session breakout work. Okay, now that's the same strategy. Based on the session breakout, the trade is taken, and also it has been shared in the premium group. This is the trade. These are the real trade, and that has played out as we discuss as per the strategy. So this is not only the rules of the strategy. How do I join? So you can find link below this video. If you want to join, just head on below this video, use the first link, and then follow the prompt where you can find how to join. In case if you have any question, you can directly ask the support. So if you look at here, you can see this is XAUUSD here. Okay, now with this movement, okay, here is the lower time frame, and with this lower time frame movement here, that you can see this is a bullish move back to the upside on gold. And with this movement, this is a clean bullish move now, and the market is maintaining this uptrending market structure here. Now at the moment, we can see the market is maintaining that uptrend, and we could see the price to continue to rise back to the upside here. Okay, so anytime the market is breaking from the structure, this is where you want to look for the entry. This is where we want to look for the entry opportunity here in this market. Now, as the market is maintaining this bullish trend, we will be looking for a potential breakup structure here. And that breakup structure is where you want to enter as soon as the market breaks from the structure, from this key level of support. Looking at the lower time frame, this is the 15 minutes chart here, that you can see. Here's the lower time frame. The market is maintaining that uptrend. Do you have any discount code? You can send text in the support if there is anything. Okay, thank you. Okay, awesome. Now at the moment, what you can see here in this area, the market is maintaining this uptrending market structure here. So with that uptrend, we are looking at this market to potentially break that low and then to reverse again back to the upside from that level. Awesome. Welcome, welcome. Everyone is smart, isn't it? So, in fact, if you are a trader, then you are smart. Trading requires a lot of thinking, right? A lot of patience, a lot of emotional resilience, and that's why the traders are different from anyone else, right? Because that's why you see that those who are good in trading, they are different. Discipline, absolutely. That's why they make the difference. Traders, those who are real trader, they are highly disciplined, and that's where makes it really, really interesting. It's a freedom, right? If you are a good trader, if you can trade well, that brings freedom to your everything. And being a trader means that you gain freedom, you gain financial freedom. Being a trader means that you gain financial freedom, where you learn to trade and you learn how to trade like a smart money. How many of you want to become financially free by becoming a trader? Spot on, welcome. So in 2026 and coming up 2027, another best thing that there are some, okay, welcome. That's first, you need to want it before you get it, right? Nothing comes like wind. First, you need to want it before you have it. So in 2026 and beyond, if you look at some of the tools that we are using now, also making trading much more easier. What are the the advantages or benefits of becoming a trader? Let's understand it. Number one is, regardless of your education, you can become a trader. What does that mean? If you want to do a specific kind of job, that you need specific kind of education, specific kind of training. Regardless of your education or training, you can become a trader. This is the first thing, because trading is hard in terms of that discipline part, that emotional part, but not technically difficult, because we have now advanced trading tool, robots, AI system that can makes much more easier. You don't need to learn every details of the chart. You need to have functional understanding and then learn the tools to trade the market, right? Absolutely. Secondly, that being a trader doesn't require any age, right? So if you want to apply for a job, then you need to have a specific age, right? If you're over 60 or 65, you may not be qualified for a job, mostly, but you are okay to become a trader at any age. Thirdly, once you learn to trade, once you learn discipline, once you learn strategy, once you have a tool or a piece of device that you can use to trade, you have the minimal commitment in terms of timing, and that's why we have trading tool. Okay, I trade using the robot, guys. All my strategies now, I do trade because this is what I love. I do trade during the session breakout, but I use the robot to help me to trade the trick, right? It's simple. It's simple to trade now. I want to know the welcome. Please, thank you very much. No problem at all. Welcome. This is here. We all are here trading together. Guys, join the free Telegram channel. You can find link below this video. Head on to that link. Use that link to find every option and join the free Telegram channel, where I'm posting every update for the educational. Okay. Welcome. Okay, so now here is what we can see in this area. This is a key level of support. Now the market trend is up. It's in a bull market. All right, so with that bull market, the market is maintaining this, okay, a bullish impulse back to the upside. So this is the current key level of support. That's what we are looking at in that area. All right. So as we mentioned earlier, learn trading and also at the same time learn the tool, learn the advanced strategies, learn how to use the trading tool. Now there is some time resistance might come. Why do you need to, you see, when you have the right reason to do that, it's much easier to do that. Let me tell you guys, this is not gonna, no one's gonna tell you this. You won't find anyone talking about that. You see, this market is moving. Okay, there is a billions of trader, millions of trader is trading this market. Okay, millions of trader trading this market, including the smart money. And the market mover is the smart money. The market truly moves the banks and the hedge funds. And one of the most secretive things in this world is the strategy used by the institutional traders, institutions, hedge funds, banks, right? Will you be able to know their strategy? Never. So it's now very advanced, the strategies. Okay, how the market moves? The market moves in pattern. Okay, and that pattern, the advanced AI can read that pattern and can read a strategy. Regardless of how you are trading, if you have a strategy that can be read by artificial intelligence, so that strategy, it's not gonna work until you implement the advanced system in your strategy. And that's why I use the robot that helps me to trade like a smart money. If you're trading like a retail trader, then probably you should quit trading right now. But if you really want to trade like a smart money, then trade in 2026. Okay, if you want to trade in 2026, trade like a smart money. Okay, so here is what is happening here. Okay, let's see now, as we are progressing, there is a 1 hour candle close. Okay, this is 1 hour candle close coming here. A strong bullish candle close in that area. All right, look, here is what we are looking at in that area. If you look at, this is a key support level, and in that key support level, expecting the market to break that low and then to return again back above here in that area. So this is the 1 hour price action. Currently the 4 hour price action, that after the candle close, the market has made its move back to the upside, and now because it's maintaining this uptrending market structure, the potential for the price to go ahead and creating a new higher high is very high. Okay, here is what's happening that you can see. This is the recent swing low. So from the key level, there was a rejection here. I'm looking at the multiple time frame to see potential move in that market. Welcome. Okay, so here is the market is slowly coming back here in that area. So this is what we are looking at in this market, for the price to potentially break that low, and once the market managed to break that low here, this is what we will be looking at that level. Okay, so once the market have enough confirmation in that area, we'll be looking at that entry opportunity. Okay, so all the questions guys you are asking, you can find the link below this video. The first link, you can head on to that link and you can find all the question answered in that area. Thank you. And so you see there is a little sideways consolidation here in that area. Okay, now with this sideways consolidation, expecting the market to break that low, and once the market break that low here, this is where we are looking at this market to test that low and then reject back again to the upside here in that market. So we'll be looking at the lower time frame to see potential entry opportunity in this market. Okay, looking at the lower time frame, expecting that this market to break that low and then to bounce off that level. Okay, one last thing. Thank you very much. Okay, so with this consolidation, expecting that the market to break that low and where we are looking at for the price to break that low and then return back again to the upside. And there is a possibility for us to see this market to break to the upside here in that market. So breaking below here, we will be looking at entry in that area. So the market is breaking that low here, which is an important support that coming up the price on. I'm going to look at shortly after a potential buy opportunity with a tight stop loss here. This is the second trade will be. There will be tight stop loss. That always I use a very tight stop loss. Keep in mind. And so looking at here in that area, we will be looking at in that zone here for a potential bullish trading opportunity. So later I'll be explaining the strategy with a tight stop loss and full risk management is important. 4459.07. So make sure that guys you do the risk management because anything can happen. Yesterday we had a stop loss hit. That's a part of trading. Okay, so I have opened a bullish trade in that area with this setup. Okay, it's a very tight, only 36 pips stop loss that I have used so that we can have yep, thank you. And I hope that you guys enjoying the live session. Make sure you like this stream. Did you like this stream? And also subscribe to the channel if you haven't done yet. Press the notification bell so that you're not missing any of the content that I'm posting every day. So place that buy here, and also I've shared the trade alert in the premium group. This is a very tight stop loss, and the market is, if you look at the 1 hour chart here, this is the candle close here, and there might be a little deepen on that pullback, but we want to take this short-term move here because I'm a scalper. Okay, I'm a short-term trader. I don't like to hold a trade for even a day. Okay, I trade session by session. That's where you know, I don't have to, because I trade all kind of trading. Okay, I did the swing trading, I did the day trading, you know, I did scalping, and like most of the system, there is a really wrong in trading education, right? Most of the system is designed in a way that you're gonna be emotionally exhausted, right? Swing trading, I have done that. How long you can hold your emotion when a trade just going in, $1,000 profit and coming back to $50, $500 minus, right? We are human. I'm not sure how long you can, after you watch a trade for 5 days, it's moving in profit in 3,000, 5,000. After 5 days, you saw that your trade has come back to $2,000 minus. Okay. Rather, I would look for a trade for 5 minutes and I'll see that that trade has gone to the, that even with the stop loss within 5 minutes is done. Okay. I don't have to go through that stronger emotional turmoil for more than 5 minutes. While I am having a strategy, you can see market is going back up. This is our second trade of the day and I want to take it to the profit target hit. Okay. Even with a smaller profit, that's fine for me. Not too small. You want to take a decent amount of pip here after the second trade. So we are up here 10 pip. We want to see the market is going back here to this resistance line. All right, that's where we want to look at. How many of you like day trading and scalping? Let me know in the live chat. Do you like swing trading, day trading, or scalping? Some of my trade that I close within less than a minute. Okay, pushing back to the upside. This is what we need to see here. All right, 20 pip up here. Pip by pip, one by one. Okay. Now let me see if we will be running that one. Still be running. Smash the like button now. If you like this system, if you like the way we trade, the aggressive trading. Now I'm going to take out this trade now. Closing that trade right now. We'll be re-entering again. Let me secure that. Okay. 20 pip. Awesome. It's got back again, so it might get a little bit of sideways open. I'm out. All right, I'm out with the running profit. We'll be re-entering again as soon as we can find that entry again. Let's look at the trade engine. We see that from the key level. This key level is auto drawn by the trade engine. This is our indicator, and also the strategy that's help us to see the key levels. It draw by itself based on the rules of the strategy. Now it's coming back again for another pullback. It might have some up and down in that area. Right, this is what we're looking at. I'm out with the trade. I believe that you guys also. Best thing is we can slave scalping. Yep. Yeah, day trading, scalping is same. We do that, right? Look, that's fine. Everyone has their own trading style. Okay, you can be a swing trader, you can be a day trading, but something works for someone, something doesn't work. Okay, swing trading is a great way if you have that, that mindset to hold on a trade for an extended period of time. Okay, everyone's trading style is different. Yes, everyone's trading style is different. Okay, so after break of this low, it's breaking back again to the upside. Intraday, yes. So day trading, they overlap each other. So day trading is the dream of most traders. Okay, this is what I always wanted to be, a full-time day trader. Okay, so that I can escape the 9 to 5. if you want to escape the 9 to 5, trading is a great way to start with it, because this is the only thing that doesn't require anything. No competition, nothing, just you need to be disciplined. You need to have the right mindset. Profit taken, and let's look at the next one. What lot size are you using? Okay, so this is a very good question. Lot size is variable, okay, depending on your risk percentage. There is a separate complete lesson on how to calculate the lot size, including the lot size calculator you can find on your dashboard. If you are our member, then head on to the website, log into the dashboard, find out every information that you need about the lot size. So lot size is variable. Never trade fixed lot size, because each trade that you will be opening, you have to have, okay, you have to define the risk specifically. Now, how do you define the risk? This some of the education. So for example, each trade that you will be taking, regardless of your stop loss PEEP, you have to keep the fixed amount of risk. Okay, so one trade probably you put 50 PEEP stop loss, the other trade you put 10 PEEP stop loss. So if you use the fixed lot, then your risk became different for two different trades. So when you use the lot size calculator, the position size calculator available on your dashboard, you can download it straight away and you can use on your MT4 platform. It's on your dashboard. So when you use the position size calculator, just drag and drop, and then there are two lines. Once you place your entry, once you one line place at stop loss, the lot size will be automatic, so it will be adjusted by itself. Some trade you might say 0.6 lot, some trade you might find 6 lot. Okay, so that your risk remain fixed. So you're gonna risk the fixed amount each trade. That's how you can manage the risk. You can see that here from this key support level, there is a rejection again, and the market has made its move again back to the upside here. Awesome. What lot size? I hope that you guys have got that. Okay, now we need to look for the next one. Now we traded with the trend. Okay, trading in the direction of the major trend is the secret key that you can use in each trade that you will be opening. That's why it is so important that you understand the direction of the trend. You understand that which way the market is heading, right? So which is very important to look at. Okay, very good. Okay, so here is what we are looking at the moment. Here in that area, the market has made its move back to the upside, so you can secure the trade here. And okay, I do 0.05 lot size in intraday. Okay, so if you are opening all trade on 0.05 lot, that's an error. Okay, I'm currently in. You can't use the fixed lot unless you are using martingale. Okay, martingale strategy. Anyone use martingale? So unless you are using the martingale, then martingale uses fixed lot and it gradually increases. Okay, you see that all the strategy, this originally backtested in based on our logic, based on my long observation, and every strategy that I trade is fully observational and proven over long time that I use. There is only that if you look at, some people use martingale. Martingale is where if you want to do sometime fully run by itself, sometimes people use martingale. Anyone here use martingale? Martingale strategy uses the lot size, fixed lot size. The annoying thing with the martingale is that it trade against the trend. That's why some of the things that we reversed in past years, some of our robot created, that was completely reversed the system. Yeah, now look, risk is a part of trading. Okay, so there is always a risk, but with the martingale is that it trades against the trend. You see that every trade, every strategy that I trade is in the direction of the trend. Okay, and risk is, there is risk. Okay, of course there is risk, but risk is a part of trading. Okay, because when I would say that if you can manage the risk, so anyone can't trade, it's good for automated trade. Even with other strategy, you can automate it as well. Okay, now with the martingale, when you trade against the trend, that sometimes creates a very difficult to trade with long-term sustainability. The first thing. Secondly, if you look at the risk, okay, I would say that other than anything else, then trading has a more risk than trading, right? Think about trading time for money. That also has risk, right? That also has risk. If you look at, if you want to start a coffee shop, and I have seen in my own eyes, a lot of people started shop and they fail because the wrong place, there isn't enough people, the economy is not doing well, right? Because if you want to do anything, you need investment, continuous flow of return, receive and give, and that more riskier, because in trading probably you started with that $500, okay, and you still have a full-time job or anything like that, and you are learning. Everything has a learning curve. Probably you have some drawdown with that $500, which is a business expense or the learning curve. But if you fail in a coffee shop, you lost your job because you spent 3 months to be successful, and then you lost everything, right? It's higher risk than trading. We don't see that, but that's what it is, right? Everything has a risk. So, but it has a reward as well. When you know how to manage, you can't find anything without risk, but if you know how to manage the risk, that's where you become a trader. You become good at anything. Driving a car has the highest risk if you don't know how to manage the risk. So risk management is the key. You can manage risk in many ways. Keeping the smaller account also is one of the best way to manage the risk. Trade on a smaller account. Okay, that's the best way, because if you trade on a smaller account, at worst case scenario, that smaller account is gone. So your risk is limited. If you trade on a bigger account, like 100K, 50K, no matter how good you manage the risk, you have a chance of losing the whole account. You see, so that's how you can manage the risk. Trade on a smaller account so that you can have room for error, like that. Or demo account until you learn become very good at trading. That's how you can become. All right, so here is, we can see gold currently coming back here to that support level. Let's wait to see where the market is heading to that. Okay, so it's approaching that key level multiple times. So we might see that there is a potential for rejection again to the upside here in this market. Might be able to find another entry. This is coming up NY open, I think in 30 minutes, isn't it? Let me double check. Sometimes times get confusing a little bit. So 734 in NY, so basically it's getting that downside here. Got a rejection here. This is potentially to bounce and coming up with the, if you look at the price action here from the 15 minutes, possibly to bringing another bullish entry opportunity as the market is breaking that low here. and getting some reaction in that area. So that might bring that market to potentially bounce off that level. As progressing towards the NY session, how the price action form in that area will determine what we could see in the next upcoming session. So here, this is in this area, it's creating a structure that might break below or break above. Still not showing a very clean directional bias that we can see in that area. So breaking that low, and we can see there is a breakout structure. Welcome. I'm currently in. Okay, martingale can be very. It's good for automated. Yeah, it depends. Yeah, absolutely. Okay, so now this breakdown that you can see is against the trend. So this is what we need to pay attention for potentially the next entry. If this is a 1 hour candle, if you look at it's closing in 18 minutes, and that might be coming for another potential entry in this market. So here is what we are looking at. So with this bearish rejection here, patience when waiting for a good entry point is key. Yes, this is what exactly makes a big difference between a successful trader and amateur trader, is the patience. Okay, so it comes with some practice, some experience. Keep in mind that everything and anything can be taught, no matter what. See, this is all about the brain, all about the practice, the neural connection that you build in your brain. Okay, so anything you'll do, because there is a coordination with the brain and all through the nervous system. So anything that you will be practicing or be doing regularly in a continuous basis, you build a neuro connection in your brain. Even being patient, you build that neuro connection in your brain. It's not an octopus, it's a human. But that's where it's an interesting human, right? So that's where you build that neuro connection in your brain when you practice patience. Okay, that also help in other areas in your life. Okay, I believe that all are watching here human being, right? And all human being has an innate nature. Okay, there are some very fundamental commonality. What is that? We all go through difficulty, right? No matter how rich or poor you are, we get older, and then with getting older, with the age, we find it difficult, no matter how age you have. So that's where the patience is helpful, because the more you will become patient, you reduce any stress coming in your physiology. You literally almost abolish or the reduce or remove by being patient, because everything. You see that sometime you had a surgery and then you had an injection here, and then like you don't even feel what happened on your foot or hand. Why? Because in the middle of this brain and that zone, the nervous system has been disabled by something. So nervous system, you can train that nervous system to not to send or not to do certain thing that will keep you happy and active. So that's why patience is very important. Okay, let's get to that later in another day. Now today we are looking at, as we are back on, if you look at, we are nearly to the NY opening. All right, so get ready for another interview. You got one. Yes, and here is, you can see the market. This is a move that you can see in the video. All right, so let's look at here 30 minutes price action. So with this 15 minutes bearish engulfer, there might be liquidity sweep further downside here. Okay, so progressing towards the NOI opening. So there is a little bit of here, we can see there is a significant a rejection here. So this is the 1 hour price action here. If you look at now that 1 hour, it's a narrow doji. So looking at the 4 hour, if we look at now, this is the 4 hour market structure that you can see. Now this candlestick pattern that on the 4 hour that you can see has created a bullish bias. So breaking below to this key support level can be a very important area of value that you can look at, right? So this is what we're looking at, that this is a key support level. Let's see how the trade engine, yeah, so the trade engine also has created the key level in that area. So all right, so this is the 30 minutes and the same key level that we have drawn. Let's go back to the 4 hour. So this is the key level and this is also aligning with that. So therefore breaking in that support level is an important area of value that we can look at for entry. This is another one is here, but I'm going to specifically look at the lower shadow. So okay, so breaking here in that low zone that you can see, if you look at this, it's the 5 minutes price action and slowly building that you're looking at for next entry. So you see that NOI session is opening in few minutes and because there is a multiple rejection from this support. If you look at that, this is 15 minutes market structure, 1 hour price action here. So the 1 hour candle that you can see, this is a kind of doji being created on the 1 hour perspective. And this market structure on the 1 hour is highly likely to be, for me, a potentially to be bullish here. Okay, so because, all right, so this is a potentially to be bullish in that area. So this is currently showing possibly to show bullish confluence in this market for the upcoming session that you can see here. So if you look at this 1 hour price action, also showing that the market structure to be potentially upside bias, and the 4 hour price action that you can see is also showing that there is a possibility for an upside bias here. So for us to look for any entry, we want to see the market giving us a deeper pullback here, and then to look for entry back to the upside. Here is currently showing that this is, if you look at here in this area, it created, if you see the market sentiment is changing now here in that area, and that change in sentiment could lead that market back above. Okay, we might see the price to cross that high, which is Okay, now we see there is from the 1 hour we saw there was a initial bounce and form a doji. Now this doji might come for a deeper pullback, or you might see the market to bounce off that level. Okay, so this is a market structure which is eventually could bounce back above. This is the 1 hour support, and 4 hour market structure is bullish. So now if the market drop down here to the support, that is where you will be looking at a bullish entry. You want to see the market to come down for a deeper pullback to this previous key level. There is a potential for coming down here to retest this order block here. That's our next opportunity that we will be looking at this market. There is a very interesting price action has come. Neuroplasticity. FOMO can lead to impulsive trading as well. Yes, definitely and absolutely. FOMO is a kind of social conditioning, so it's not only in trading. Okay, FOMO can be in any other aspect, any other dimension in our life. Okay, it's a social conditioning. So if you are, we knowingly or unknowingly experience FOMO in many aspects of our life. So that's where it comes from. You can rewire, okay, that part. Sometimes it's very subtle to understand. Have you ever went to the house rent, or something has a very high value, expensive, rushing into the buying or selling? So that's where the FOMO comes in play. So you need to be like, you're not expecting too large. How to learn to be patient in trading and be more disciplined. I have got much better recently, but I still get the urges to recklessly trade even if there is no trade. Okay, which is a very common, okay, and how to learn to be patient. Okay, so the actual that the method that will permanently, so there are two things, like imagine that there is a window on your house and there is a tree, so you are waiting to see something and then you saw that there is a tree just covering your window and covering your view. So you can do two things. You can trim that tree until the summer and then it's gonna come back in winter, or you can just take that tree out of the root, it's never come back. So to take that things out of it entirely is to very simple method. Okay, patience, very simple method. Let me tell you guys, it's gonna work. Anything that requires you to be patient in your 24-hour, because everyone has a different cycle, right? Some of you might be spending the whole day at home looking after children. Some of you might be spending the whole day working in factory, or some of you might be a whole day long driving. So everyone has a different aspect, so no one single way that one can learn it, but paying attention, okay, staying present is the key to become patient. Okay, whatever you are doing, stay present with it. That will create a neuroplasticity in your brain to be patient. Now it's easier said than done, right? So one way that 100% will work is that in this 24-hour time, find 30 minutes where you don't do nothing. Not number one, no mobile phone, no TV, nothing. 30 minutes, do nothing. That will bring patience, because there is always a tendency to do something. So when you are not doing something, then you are doing nothing. Okay, do nothing, and that will bring the patience. That's a permanent solution, but it has to be consistent, at least 30 days, so that you can rewire your brain. So please, has instant market gotten any advantage? Please, has instant market gotten? What do you mean by instant market gotten? Okay, this is where the market, if you look at with the NY session, it's created a doji. Now this 1 hour candlestick pattern that you can see, like everything in life, patience takes practice. Yes, so you have to be like patient with something that will rewire the brain. So doing nothing also is being patient. For 30 minutes a day, it's gonna rewire the brain for 30 days at least. That will help that to become better trader. All right, so now let's get back to the entry criteria, what we can look at here. Now, in this area, this is the lower time frame price action that you can see creating a series of higher low. Now, quite a few long week doji is being here, and this is interesting structure that being created here in that area. So because it's consolidating, if you look at here, this is when I'm looking at the 5 minutes chart. It may continue to rise here to create a new higher high, but the best entry will be once the market breaks this support level and then giving an entry opportunity here for another bounce back to the upside. All right, so it's very slow. Music needs something fast. After the first 15 minutes close, so there is here change. It starts bullish move again here. So that's where the market now breaking back to the upside, where series of higher low formation that you can see. Here is the series of higher low. The market has crossed 10 and 20 EMA. Okay, so very interesting price action here. Now at the moment we see that there, after this break of the structure, after this false head and shoulder, which is basically broken to the upside rather than downside, it was liquidity sweep after forming this double bottom. From that level it bounced off that. Now looking for an entry. After this doji on the 30 minutes, the market structure is showing that it may continue to push back to the upside. So there's a pattern here that you can see. A big drop created a higher high, another drop. So we might see that this market to from this resistance to come back to this order block and then to return again. So if you look at the daily market structure, you can see that previous daily price was significantly bullish. There was a massive bounce that you have seen yesterday's move. Now today the market, if you look at here, from this high that you can see drop to that. Now there is a pattern here that you can spot. Looking at this one here, you can see this is a stronger drop and then there is another drop. Now in this both situation, if you look at, after creating a smaller high, there was a massive breakdown here with a bigger move back below. So setting it as a key level for the market to come back and potentially to cross before we look at the market to go ahead and create a higher high. 4-hour market structure is significantly bullish. So therefore, for us in this market, the only thing that we can look at for buying. It is showing a significantly bullish market here. So therefore, coming down back below, right? So if you look at here, straight coming back below here is the zone that you want to trade. From the 1 hour that the market is approaching that 10 EMA. So only you will be looking at buying and looking at multiple time frame is where the best trade comes always. Like everything in life, patience takes practice. Yeah, so coming up, if we look at also bringing some of the fundamental now. Fundamental is a really fundamental part of trading, right? If you cannot trade without considering the fundamental, because so also relating fundamental with technical is the art of trading. How can you relate fundamental with the technical? Okay, now the biggest mistake traders miss, the first thing is as soon as they see fundamental, they buy. So what the fundamental actually do or give you, what information fundamental gives you? Can you write that something in the live chat? What information gives you fundamental? For example, we see that there is a significant news. It's could be a red folder news, but anyway. So this is a, though it's a news, it's not anything certain, but you can consider it as a part of, because this is where the source come from. But if the rate cut, which is more certain, okay, happen, then that's a bullish for gold, bearish for DXY. Simple way, right? Now if you have gone through the course in the dashboard, on your student dashboard in the website, okay, where I have clearly explained that in the advanced fundamental, right? Look, fundamental, you know, you don't have to go through the microeconomics and macroeconomics and then do a PhD on economics for becoming a day trader or a swing trader. There is a rule of thumb, okay? There is a simple way to understand that. And that advanced fundamental that you can go through on your dashboard as well. So it's a very simple way. I have paraphrased everything, right, in a simple language that anyone can understand. If you're a beginner trader, then the best thing that you can learn is fundamental in the student dashboard, so on the website. If you are not on the website, that you can visit the website www.forextradingwizard.com, become a member, and then you can access the fundamental course that has in it. Okay, so what that fundamentals tell you, all right? So if rate is being cut, that rate cut, okay, then how does that impact? It boosts gold. Now how do you use in trading? That means you are buying all the time? That's not true. You might be selling also gold at some point, but you know that the flow, okay? Fundamentally, you can consider with a river, and you are a sailor, okay? Fundamentally is a river. So once you go to the river, before you sail, the first thing that you look at is which way the water is flowing. Now, you know that I think 1.5 year kid will not know, but at least 4-year-old kid can know that which way to sail. So that is the fundamental, that's all, okay? So if you see that the flow here in the upside on gold. So what do you need to do here? That thing, that wait for a pullback, then buy. You see that there is a break below here. So the way the fundamental will be used is that this market is highly bullish, so only we'll be looking for buying when the market is showing its pattern. So if you look at the 1 hour, you can see there is a break below, and now looking at potentially entry. Let's look at here. It's approaching the key level. So this break below there is still some liquidity here. Okay, so the next way, so the technical you need on top, like fundamental you need for the flow, for the direction. The technical you need for, so the technical is, if we compare let's consider that you want to go from point A to point B like that. Okay, fundamental is will define you, or you will determine, say this is C and this is D. So fundamental will let you know that which destination is best for you to go. That is fundamental. Once you know that which destination is best for you to go, you decided to go destination C. Now this roadway is the technical. Okay, so that's the technical. So that means that you're gonna see each move and trend and pull back for an entry in the direction of that fundamental, in the direction of that trend. It's the simplest way to know that. Okay, looking at here, this is where there's a significant break below. So there's an order block here that if you look at in this area. What is the market doing on euro dollar? . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . So there's some kind of pullback on that USD pair. So if you look at here, you can see that gold now coming to that support that we're discussing. So this is an important support that you can see. So this is where you can see the market has dropped to the intraday support. So this 4-hour support is important. As soon as the market drop here, we will be looking for that entry in that market. Good afternoon. Good reaction of the support. Could be a good entry point here. It's still in a downtrend here. There is a reaction, but it still can come back for a deeper liquidity sweep. I'm just looking to see, because if you look at it, is still left significant imbalance in that area. It can continue to rise, but I would straight look to buy if the market tested this red doji. If you look at here, you can see this is an order block here. Okay, and that's a key level. Okay, so it's coming to a level we might be able to find potentially some entry, still creating a bigger red candles. So that's what we will be doing here, guys, is we will be placing a pending order. Okay, so that can help us to filter out if there is a, if you look at it, it's coming down here and this is an order block. The rejection is still stronger. So if you look at the 4 hour, it's coming to that intraday support. There's a very higher chance for a bounce of this 4 hour support. Okay, so where it is now at the moment, let's look at 90 pip from the low, and so 5 minutes candle, this one is forming a doji, so we might see here potential short-term upside, and okay, so there might be an upside from that level later. So we'll be using a pending order here. So it's gonna be a buy stop order, keeping this stop loss below this low. It's a very tight stop loss. It's a buy stop, only 36 pip stop loss here. Wanna take this initial bounce back to the upside. This is a quick move. Potentially, if the market bounce off that level, we'll be using the buy stop. Okay, so it's a buy stop order. If the market goes up, we'll be looking at that entry. So we'll place take profit here, but depending on the market structure, we will be changing if needed. It's a pending order. So if the market goes up, we will be, if the market breaks that high, we'll be on this trade. If the market breaks below, at the moment we will not be opening that trade. So I place that pending order. This is the buy stop at 4461.86 with very tight stop loss at 4458.13, which is extremely tight. And still not triggered. Okay, so the trade is active. Got active. Price action actually was not. It's the second trade. Might. Expected little stronger move. Okay, getting back up here. So you want to see that initial move, because the market structure, if you look at the 4 hour here, that's not very. So here in this zone, this is not a very stronger bullish price action, but you want to see that initial bounce. Might still can come back for another liquidity grab, but you can see that upside here. You want to see a short move, right, for short period of time, because it's a 4 hour support. Right, so looking at this market to go ahead and hit that. Okay, I hope that the stream is on, and you guys can hear me. There's a little bit of disruption. So we are on it, and we are on it. Can you hear me? Okay, thank you very much. So this is a second trade, and we would like to, this is, I might not run very long because the market structure here left a lot of imbalance, but we want to secure this one as well with a decent amount of pip that we can take home, where nearly to 20 pip, and I would like to take that out with this one. 20 pip up, candle, the close. So another 20 pip. The market might do here a little up and down, so I don't want to give that another chance for the price to come back to the stop loss here. It might continue to rise, or it might come back here and then reverse back again. If the price drop here, we'll be re-entering another trade in that area. So adding up to another 20 pip. All right, so that's where we are. Three trades today so far. Now, how do you find that? I believe that you enjoyed that. Now it's coming for, if you look at it, might come back here again. My next plan on gold is to buy from this support here, that you can see if it breaks that low here, session's low, that's a good entry area that you can look for again on gold. That being said, it was an incredible trading session with all of you guys. I believe that you enjoyed the live session. If you enjoyed, make sure you don't miss out that any of the strategies that I'm posting, education analysis, and also check out the link in the description for all the good trade. Thank you for that. And let's look at the next entry here. We can't take a much bigger profit target because the market in a consolidation. That's only the thing. Okay, so thank you very much, and I'll see you again, guys, again tomorrow, coming on live in the same time, same channel, same place. Make sure you subscribe, and also just press the little notification bell so that you are not missing any of the content that I'm posting. Thank you. We'll be speak to you soon very much.